Welcome everybody. Right, I'm gonna go through this. I do have a school run again this morning, so I will, keep this short and sweet. But obviously we're gonna go through it. So, we've had 6 days of escalation. I have to start there. It's starting to get a bit boring, but yeah, that's what we've had. We've had 6 days of escalation in Iran. Um, the only thing that obviously is being kept at bay at the moment, Iran's only hitting military targets. America is only hitting military targets as well. It's been kept off the Strait of Hormuz. If anything commercial is hit, or if it starts hitting other places, then obviously we're going to escalate even more. I would say escalation is high. The other thing that we've got to have as a bit of a macro outlook is that the data coming out of the US for June is pretty good. So good in regards to their looking, I think the expectation is there might be an interest rate, reduction coming up. However, we've also got to be aware that July everything has escalated, and we obviously haven't had that data out yet. Lots of the things to kind of take into mind. Let's just have a little bit of a review of, stocks and obviously what's happening. So, the stock market's down heavy. All right. So that would mean that there's, not much risk appetite out there at the, moment. So that's obviously what we are. Trying to kind of look at the moment here is that we have to obviously always identify or try and identify as best we can where money is flowing into. Gold seems likely, but not massively likely. I'd say everything's a bit odd at the moment. We've got yields taking a bit of a tumble, but still in this danger zone, coming up to a major level of support here. Dollar, we got it right yesterday. It's about probabilities. Is there more probability of it reaching 100, 800 than there was it reaching 100? So I was pretty happy with that. Our roles of today is it more likely that we're going to reach now? We're going to breach this 100, 800 and hit 101, or are we going to hold and obviously hit are we going to hold and hit this 100 500? So these are obviously all things we need to be slightly aware of what's going to happen, where, why, how. So let's have a little bit of a gauge through. We're obviously identifying that, the dollar's pretty strong at the moment, and but obviously there's an interest rate cut, looming here. All right, so that's going to release a bit of short-term strength on the US dollar, because obviously how the whole FX markets work, if you don't, realize, if one currency's interest rate is higher than another currency's interest rate, then obviously the interest rate, obviously stability plays a part too. But obviously, if the interest rate is higher, it's going to, more money's going to be invested here, because if these guys put their money into here, they're going to make more interest on it, So that's why, interest rates are, so important. And yeah, it's basically what this whole, market's built around. So don't try and hide away from interest rates and macros, because if you're hiding away from the FX markets, and you might as well go and join Ladbrokes or Betfred, or and go and place a bet. Obviously, our goal here is to increase our probability. That's the only difference between trading and gambling. It's increasing our probability. All right. So yeah, so US dollar wise, we're around break even. Had a nice push up yesterday. Um, let's obviously go through everything, and then we can, decide what potentially might happen. Yen, starting to obviously catch up a bit. I'd be tempted to leave this one in, just in case we get one of these lovely spikes here. Spike down, and then push back up. I don't want to be buying USD JPY from up here because we'll be buying from the highs, and it's not the best place, especially obviously with a potential Japanese intervention looming. So we do need to be a little bit careful here. Just recapping from yesterday, Aussie should have held this. I closed out, but obviously that one hit TP, so very, very nice there. We have got GBP USD also didn't quite trigger us, but obviously we got the direction correct. 2 out of 2, and then Euro USD tapped us in here early in the morning. Should have held this one too because it went straight to TP. I mean, I did close out about, I think it was about probably about here, I think, or three-ish. So pretty much TP on that one too. So we didn't do bad yesterday on intraday trades. I was pretty happy. Um, I'm gonna let's just have a look at what we've got coming out today as well. There we go. So we have got some housing, import, export. Remember, this is all data from June. It's not data, now. And if you think at the end of June we had that escalation, or to the start of an escalation, early, no, it must have been early July. So June was pretty much intact. We'd had a couple of months of, or a, month of peace. However, we do have to identify that yes, these are probably going to come in hot. However, you know, um, it might all change next month, so we do need to be aware of that. I actually think when Kevin Walsh speaks, I don't think he's gonna reduce interest rates. I think he might, suggest that if this war ends, that he might obviously, look to be a bit more aggressive. But it'd be interesting to see the data from this month because everything is starting to get a bit more expensive. I mean, I've got a Range Rover Sport. I'd love them. I wouldn't obviously have any other car. And it cost me about 140 quid to fill it up yesterday. So I do kind of, I am kind of, yeah, learning that, yeah, it's a bit more expensive. It's a bit more expensive. And so, yeah. Right. Let's now have a look at what we're going to do. I'm in two kind of minds. I actually think the dollar, I actually think because of yesterday. I actually think dollar is very, very close, and it's us kind of hazarding a bit of a guess here. So I'm gonna go for dollar, strength again. I'm going for the overall picture here. I'm going that there is, more chance of us hitting this goal here, but not by much. And well, when I mean not by much, I'm gonna go 60%, 40%. It's really tight. But I think you know what, with I'd like that obviously yields have dropped here. I think if yields clean through here, yes, potentially we might have got it wrong. But I don't think there's, think about it. We've got high escalation here. Why would yields be dropping? Oil, has dipped back down, but obviously, still in this danger area here. I do think this could pop up too. So I'm going to go, with what I'm kind of, looking at here. However, a little bit like yesterday, we're going to err on the side of caution here. Um, I'm going to drop this ever so I'm going to leave these on just to kind of save me having to draw them. I'm going to drop this down slightly. So what if we went 950, 7050? Oh, no, we don't want to do that. 00. There we go. That's what we want, I think. Just obviously targeting it, coming up into this area. Do you know what? I mean, uh, 70 might be a bit high. I'm going to err on the side of caution here. I'd rather we were a little bit more uh, cautious than, not. So I'm going to go for something like this on uh, on this one here. So that's what I'm going to go with on AUD USD. Let's put this one down here because yeah, I do think we're going to pop up, but I can't see a continuation here. And that way we can obviously leave everything as is. It's nice and easy. And then there we go. So I don't know why I've done it like that, but I have. Let's go for this angle. I want to go for this here. So yeah, I'm going to leave TP1 here. So just want this to pop up here. Um, oh, and then we're good to go then. This one, there we go. Right, so something like this. That's what I'm going to angle at towards. Right, you just put this one in here. Uh, right, AUD USD trade opportunity. Pretty similar with GBP. And we're going to go over euro in a minute. I might leave euro out because we do have inflation data coming out for euro. I'm expecting this to come in lower. It's pip to come in lower anyway. I'm expecting it to come a bit, lower because, like I said, there's a chain reaction upon everything. So GBP, I actually quite like just dropping this a little bit lower. Let's have a look what we've got here. 975, 175. Just because I just don't think that we're going to pop all the way up here. What are we looking at on a bit of a range here? Asia was quite slow, so we are going to have to pop above Asia quite a bit. Daily wise, yeah, I like the idea of it eating up into yesterday. So I'm actually gonna stick with this. I actually quite like it. We're gonna just play air on the side of caution um today because I just don't want to or this morning we're gonna err on the side of caution because it's not clear. All right, it's not clean. So that's why I'd rather just play, allow for potentially our trades here not to trigger. But obviously, if they do, we're in a great spot. And obviously, that's how you've got to look at it all the time. What is this? 25 and 50, yeah. All right, so that's what I'm kind of looking at here for GBP USD. I don't want to. The only other place that if we wanted to be ultra aggressive, we could put our entry here. But I would just rather allocate a little bit more space than us, trying to be ultra aggressive here. All right, GBP USD trade opportunity. There we go. Right. Now I'm going to potentially do something a bit different here. I'm going to stay away from euro. All right, just because we do have, CPI data coming in, and I think we obviously had a nice chunky move yesterday. I'm going to put USD JPY in. I'm going to keep it the same as yesterday, but allocate for this nice wick here. All right. All right. So this is one that I'm not expecting it to trigger, but I think if it triggers, we're gonna be happy. So that's why I'm gonna leave USD JPY in. Um, oh, I can't spell trade. There we go. Because yeah, I'd rather, like I'd said, these wicks have been happening all the time, and it would be brilliant for it to wick down here, and then push back up. Like I've said to everyone, we're getting these very aggressive wicks to the downside, and then we're trickling up. Aggressive wick, trickle up, aggressive wick, trickle up. And this is all about, here's one here. This is what we want here. A really aggressive one per push up. And then obviously we're going to be happy. So, and this is all because there's, heavy, he heavy selling pressure, but obviously, again, stronger US dollar than yen. So yields have a massive impact on yen because, like I've mentioned to you, Japan, the one thing you have to be aware of is how much they import. They import everything. All right, and obviously, what are they spending when they're importing US dollars? So right now it's even more expensive because, I think I pointed out USD JPY is at prices of like the 1980s, right? It's crazy. So that there's a huge move coming, but it's just when it's gonna come. And I do think potentially after the next speech, if there is any kind of inclination that that obviously the US are going to, potentially have an interest rate cut this year. That is when it, will potentially happen. So let's have a look here. Let's have a look. Greg, you mentioned earlier in the week that the macro tool needed fixing. Now, I'm going to do some work. I'm gonna do some work on it this weekend. I just haven't had time. If I'm perfectly honest, I hadn't seen my children for about a month because obviously I was in Dubai. So I've been trying to, do obviously my trading and then, obviously spending time with them in the evenings. So, I haven't obviously, yeah, I just haven't had that extra time, but I will have some time this weekend. So I'll make sure that the, macro tools are all up and running ready for Monday. Which news website is more accurate? There is Core CPI today. Investing says 3 stars, but forex factory only shows a yellow far bolder. So remember, it's split up, yeah, year on year. So yellow on forex factory is two. So just make sure that you're looking at everything, Matt. I personally prefer it investing.com, but you know what? They're basically every economic kind of calendar is identical. So Greg, I would have gone with dollar with weakness because of yields. Yields are still at all-time highs, or not all-time highs, but they are still really high, right? They're higher than oil, anything. So I would say for me to be a bit more chilled about yields, like I mentioned, we need to break through this kind of area here. All right. Once yields is trading back below here, yeah, I'd be happy to go with, some dollar weakness, and obviously that can potentially happen. So yeah, right, I'm gonna end it here. That's the plan. And yeah, let's, remember. remember, guys, if you've got any questions or anything, always feel free to reach out. I'm always here. So have a good Friday. Let's, smash it and yeah, bring it on. Bring it on, guys.